Good morning, everyone. This is Brian Nedner with your Wednesday, June 12th morning market commentary. Quite a bit of changes on the report yesterday for the corn. So let's get right into that. Production was lowered 1.35 billion bushels. And then on the other side, demand was lowered 525 million bushels, along with imports raised 15 million bushels to give us a total carryout drop on the new crop of 810 million bushels. That brought us to 1.675. Obviously, that number is a good deal lower than most analysts were expecting, and that came from a larger yield decline than most analysts were expecting, dropping yield a total of 10 bushels in just one report. Definitely more than just about everybody was looking for yesterday. On the acreage side, yes, the USDA did lower acreage slightly. They lowered corn acres by 3 million. We might want to still keep focused on that acreage number because on June 28th, they could lower the acreage even farther. 3 million acre loss in corn. A lot of people are assuming that 5 is probably a safe number, with general talk getting up 7 or 8, with some people going as far as that. So we'll also want to pay very close attention to the acreage report at the end of the month. We do want to say, once again, for corn especially, don't forget about the demand side. Demand was lowered 525 million bushels. We had seen some people coming out talking about a corn carryout as low as nearly 1.0 or 1.1. That would have been true if demand had not been lowered yesterday. If you wipe out demand entirely off that balance sheet, yesterday's yield drop would have got you to 1.135. But again, we can't forget demand. It's still an issue. In fact, speaking of that, let's take a quick look at the crude oil chart. We see that crude oil's been on one heck of a drop. It's falling even farther this morning. On the demand side, this is a little concerning for ethanol. Yesterday, USDA did not touch ethanol at all. And ethanol reports have been decent the last 3-4 weeks, but looking again at that crude oil chart, we have to wonder, is this going to continue falling? And if it does, will this eventually slow down the ethanol report again, which needs to keep an active pace to reach the USDA's expectations? So let's keep crude in the back of our minds when looking at corn here on a daily basis. Moving over to beans, we'll put up the weather maps again here. We still have more beans to plant, obviously. And looking at this first 1 to 5 day weather map, starting to see some pretty active rains again for the eastern half of the Midwest. Some of these totals were put on the maps yesterday, and a little bit was added to those totals on this morning's update that we see here on this map. And then even more interesting is looking over at the 6 to 10 day map here. Very active totals added to this map yesterday, with slight increases again this morning. Pretty clear without even having to look at the legend just to see this map and all the bright colors on it. We're talking 4 to 5 inch totals for Illinois, Indiana, Ohio. So some definite active rains leads us to wonder if some areas this will mean prevent plant beans. Haven't seen that talked about in the market too much yet, but if this map really does pan out in the 6 to 10 day, you might start hearing that later this week or early next week. So something to keep focus on. As for the bean report yesterday, not much was done. Exports were lowered 75 million bushel, probably not much of a surprise there. That takes new crop up to 1.070, putting a 1 out in front of the beans, likely to keep some pressure on this market. There was no change to yield. There's no change to acreage. That is common for the June report. If USDA is going to change bean yield, we would expect to see that hold off until the July report. And of course, like we mentioned, for corn acreage changes at the end of the month, obviously we'll want to keep a close eye on what they do to bean acreage at the end of this month as well. Could see a good number of acres switched from corn to beans on that June 28th report. Over in wheat, not too much excitement there. Demand was actually raised 75 million bushels, the only crop to see demand increased. We'll see if this active rain that we just saw on those previous 2 maps, does that bring up any quality concerns again for the wheat? We could see that talked about. Not yet discussed, but again, that's another thing to keep eyes and ears open for over the next couple days in wheat. In cattle, interesting couple of days there as well. Monday saw limit up trade. Didn't seem like it was high volume buying, and obviously a technical bounce was needed, but Limit up yesterday and adding about another dollar on the futures. Limit up Monday and adding another dollar on the futures yesterday. $4 bounce. Well, 13,000 lower show list would suggest maybe we get a dollar or two higher cash trade, but futures have already bounced $4. So let's keep a close eye on cash bids here this morning to see if Packers do want to pay up a little bit on this lower show list. It is worth mentioning that Packers are at the highest profitability levels of all of 2019, so it would give us a hint that maybe you could start to see a little bit of improved bids. But as we always do, let's see what the first starting cash bids are when we do see them at some point today. So that's what we have to look at today. Give us a call here, 800-551-4626, or as always, visit us on the web, allendale-inc.com.